Raj, is it okay if I come to you to hear from you on superannuation and personal tax?
Yeah, in terms of personal tax, Dinesh, I mean, the government has said that they will support the stage 3 tax reduction. So they were meant to come in, they are meant to come in next year. So 1 July 24, they will come in. So no changes to personal tax rates this year. They remain the same, but they've indicated that they will support it. It's not guaranteed, right? But and that's when we go to this next stage where we have 3 tax rates, which is 19%, 30%, and 45%, and the 37% tax rate goes, right? So we're looking forward to that. It's all about simplifying the income tax rates for individuals, right? And obviously there's going to be some savings there for people earning up to $200,000 will have some savings. Just again, one thing to bear in mind that the ATO wants to increase their compliance, just as with the businesses. So it's important that individuals get their personal tax affairs correct, right? In terms of simple things like deductions, rental properties, and so on, making sure that you get your tax returns in. That obviously talk to your tax advisors, get that sorted. On the superannuation side, I think Sandy mentioned this. The government, is looking to impose tax on anything over $3 million. So it was a promise that they said that they wouldn't touch, but they ended up talking about it before the budget, and now they've said it'll come into effect 1 July 2025. So they push it out. So it's not immediately. It's a couple of years away, and anybody who has more than $3 million in accumulation phase in their super fund will now be subject to 30% tax as opposed to 15% on their earnings, right? So that's something that's coming in the future. One more thing from a superannuation, from a business point of view, just letting you know, your employees, your super payments to employees is going up to 11%. It was 10.5 for this financial year, so it goes up to 11% from 1 July next year. So bear that in mind. Adjust your systems. Most of your accounting systems will adjust automatically, and also they're increasing what they call the superannuation base. So that is going up to $62,270 to be precise. And what that means is that your quarterly super, so that's the maximum super contribution base. So if somebody earns more than $62,000, you don't pay super on the extra. You're capped at $62,000. And in terms of actual super, that's about $6,800, right? So your quarterly maximum super contribution will be $6,800. But if your employees are under that cap, then just to bear in mind that we're going from 10.5 to 11%.
Did you see, Raj, that they're also changing how businesses have to report the superannuation, but it's not until 2026 that
right.
Pay on each payday versus, I think it was.
That's right. Yes. Yes, that's right, isn't it? That's right. I saw that. Thanks for pointing that out, Sandy. I did see that somewhere.
Yeah.
So going, we used to pay super annually.
Yes.
Then they brought it to quarterly, and now they're saying on the payday.
Yeah, but not until 2026. So they pushed that out.
Not until 2026. Yeah, that's right. I just saw that as well. Yeah. So we're going to go away from quarterly to on the payday. So on the day you pay your employees your salary, you pay their super as well. But that only comes in after, as Sandy said, 1 July 2026. Then finally, from a GST point of view, we haven't seen any reform. Our indirect tax partners have been saying that there has been no reform in this space. We have been calling out for structural tax reform. Obviously, the budget, I don't think, as Sandy said, is in a small surplus this year, $4 billion, $4.5 billion, but then going to negative in the following years. And there's a lot of people out there who believe the way to solve this is to look at the GST, right? And we bought the GST back in the year 2000, July 2000, I think it was, when it came in. Been around for 23 years and it stayed at 10%. And they haven't broadened the base, right? Whereas most other countries have, gone up from 10 to 7.5 or 10 to 20%. So no reform in that space. So it remains the same. But again, there's additional funding there, even on the GST side, for compliance.
Yeah.
So it's important that that obviously certain industries are more susceptible to this GST sort of risk, particularly if you're in property or property development. If you're not for profit, there are specific rules that's going to impact you. If you're in financial services, certain supplies and so on. So again, we have a team at Grant Thornton who will help with that. It's very important to get your GST right and it's recorded correctly. So there is going to be a compliance program. I think they're going to spend about $580 million for has allocated a significant amount of money to get GST compliance right. So obviously they believe that there is some issues here that they need to address, right? So my recommendation would be to be proactive rather than be reactive to this, and making sure that you're complying with your GST obligations as you go along. So I think that's about it, Dinesh, from a personal tax, superannuation, and GST point of view.